everyone, this is Mish Schneider, Chief Strategist at MarketGauge.com, and we're going to talk a little bit about currency pairs today, looking at the USD related to the British pound and to the euro, and of course as it is on its own, the impact it could be having on the global markets and also on the US markets. And we're going to take a little bit of a sneak peek into CPI based on what we're seeing in some of the precious metals, and platinum added to that list, plus sugar as a soft commodity. That's been our great barometer. So let's get started. So let's begin with just a fresh look at the US dollar. This is the DXY dollar index, and what's so interesting to me is that the dollar is holding up in the face of a lot of negative talk. And I'm not just talking about your everyday analyst. I'm talking about people like Janet Yellen, Stanley Druckenmiller saying that it's going to be the dollar's demise and that it's going to lose its status as the world's reserve currency. And every day we're hearing news about things that are being priced in yuan as opposed to the dollar. Nonetheless, there's talk and then there's technical analysis. And a 23-month moving average, which I believe I've shown you in the past as a great look at a little business cycle within a bigger business cycle, the bigger business cycle being 6 to 8 years, the mini cycle being 2 to 3 years, we have not cleared any of those to show expansion in the indices, let's say. But in the dollar, not only are we above it, but we tested it actually almost to the tick at 100.7, and we've done that several times, as you can see here back in February, then again back in April, and now here we are looking at it again in May. So what that tells me is this dollar is not ready to die just yet, number one. Number two is we have a really good point to look at. If we start to see closes below 100.7 in the index, then I think that definitely spells trouble and of course brings opportunity. On the flip side, considering we've now tried to get through this level of at about 102, let's call it 102.30 several times, and we have not really been above it except for that one brief trip back here in April, I would say we can even raise that up and say somewhere between 102.30 and 102.90 or 103, we clear that, we're probably going to take another trip closer to 106. So that's the dollar in and of itself. Let's take a look at how it pairs with the British pound. Now, interestingly, looking at the pairing between the pound and the dollar, even though the dollar may have found some kind of footing, we could see that the pound is actually going up against the dollar compared to where it was, say, in March. And so at this point right now, there's a couple of interesting things to see on this chart. If we just go horizontally back, we can see that obviously this has got really good support between 124 and where it's trading now, figure around 125.50. And it made a new high yesterday against the dollar. So what's interesting now is what happens from here. Was this an anomaly and some kind of a reversal or not? So very simply, I would be looking at the low from this day right here, and that low is 1.2613. So far today, this is trading when I'm talking to you at 12615. If this closes underneath the low, we call that basically a classic reversal trade, new 60-plus day high and a failure, which means that we would be looking at the next day or tomorrow at a possibility of the dollar gaining against the euro. On the on the pound. On the flip side, of course, if we get through the high of yesterday, which was 126.30, then that would probably mean that we would see more upside, the pound gaining against the dollar. And really, to kind of take a look at some history here, we'd have to go back a little bit. But we're really in an interesting zone over like 126.80, and we can even round it off, and let's just call it an even 127. That would actually be extremely bullish for the pound versus the dollar. Now looking at the euro versus the dollar, interesting here if we take a quick peek here at the volume. And the volume definitely goes really high when we start to see selling in the euro versus the dollar. But now, as we're actually seeing a little bit of stabilization in the euro versus the dollar, the volume patterns have been not all that exciting, not too bad, but still not really showing great buying coming in at these levels. And we can certainly see that reflected in the chart. So the explanation that I'd given you about a new high, like you can see here with a follow through and a breakdown to a close under the low, that did not happen here. So we're very much still in a sideways type of situation. And we don't have moving averages on this chart, but nonetheless, we can just see without that after we had the whole situation with the banking where the euro took off against the dollar, now what we saw exactly in the dollar chart today with it gaining some strength, it's gaining some strength against the euro, which tells me right now that we're still looking at that range between, say, 108 and 111. And until we break that range one way or another, it'll be very difficult to see a clear path. Also, if we just, again, stretch out to a little bit of a longer time frame, and we go back to last year, actually, we could see that the euro is still stronger than the dollar versus where it was a year ago. And just as a great example, by the way, of a new high and then a close below and some follow through, the last time that happened was here on February 2nd. So right now, basically what I'm saying is I think you'd have to look at the dollar for more direction. And again, if we can get through that 102, 102.30, then I would say probably we'll see the euro slip. Conversely, we get under 100.70, most likely we'll see the euro go higher. Now, I know I mentioned that I was going to show you the metals, but I really wanted to show you Brent, to the July contract for Brent oil, because so much of the basis of recession versus more inflation, the CPI coming out with an expectation of it being about 0.3% higher in the U.S., depends on what happens here with oil. And exactly the opposite of what I showed you when we were looking at the Euro USD chart from February. We had a new low, new 60-plus day low, and then a reversal the next day with a close above. So right now we're working off that reversal. So we can say that if Brent holds $68 a barrel, where would be the next level it had to clear to show even more strength? And we're looking at it at about $80 a barrel. So keep your eye on there. Now let's move over to the gold chart. In the gold June contract, again, classic type of reversal that we've been talking about, right? New high, and then the next day it closes under the low of the day before. And now, as bullish as everybody is in gold, one of the things that I've been talking about, and I have been one of the biggest bulls in gold, is not that gold can't go higher. It certainly can. But right now, kind of like the story with the dollar, everybody bullish gold, that starts to get more of a crowded sentiment. So to me, it's looking like after reversal, unless we take this level out, obviously, that would be a different story. But for right now, if we go on that about 10% rule of how this can actually decline, there'd be, you never know, but it could be that we see a move finally back down closer to 1900, where I think I'd get a lot more bullish at that point. And what I'm saying is either here or lower. Right now, again, just like so many other things making trading incredibly frustrating, this is actually choppy and possibly forming a bit of a bear flag. So if we just use that type of situation of a bear flag, you know, we could see another test down to about, let's say, 1950 to 1975. And obviously, if we got some kind of support there, that would probably be your better buy. Now, moving on to silver. We also got a reversal from here when it made a new high and closed lower, but we haven't really gotten any kind of major follow through. So these are technical, but also a little bit of an emotional trade right now. So that tells me very simply, we have to get through this level right here, which would be essentially over 2650. Let's call it 2650. And then on the flip side, of course, as we continue to chop around, we really want to hold around 2470. And in between is kind of just heartbreak unless you're really an active trader. And if you are an active trader, then I suggest that you use things like opening ranges, where you watch it for the first 5 minutes, and then if it breaks up or down under that 5-minute opening range, you could probably get some follow through with some tight stops. Now let's move on to something that's actually really interesting to me right now, something we've mentioned before, and that is platinum. Now, platinum chart to me, might be the best place to look right now for clues in terms of the precious metals. So we're looking at a 9-month period of time. And again, new high, follow through, breakdown under the closing under the low of the day before. We get a little bit of a down move here. Now we're right back up. So that puts us again in the precarious place of we have to take out the trading range high in order to see more follow through. And that would be at 1148. Let's call it 1150. But from a broader perspective, if you step back, this is really starting to look more like a giant inverted head and shoulders bottom. Some people would say a cup and handle. And if that's the case, we have to go back quite some time to see where platinum was. Here we are in 2021, post-COVID. And then other than that, we have to really go back to like 2014. If we start to see platinum take those kind of prices levels out of the more recent levels right here, like I just showed you at 1150, then I would say that it would definitely be making a hard case for more inflation. And finally, I'd like to show you the sugar chart, because to me, sugar still represents a great barometer for the future, not only of food prices, but potential peek into geopolitics, and definitely in terms of shortages and Mother Nature. So it's pretty clear that we just looked at the same time frame in platinum, and we are nowhere near those prices, whereas if we look at it in sugar, we've cleared these prices. So sugar is still skyrocketing here. Let's go to a little bit of a tighter look at a 6-month, and you know how bullish I've been, and I've brought this information to you many, many times. Now we have a similar situation where we made another new high on this day, which was at 2683. Next day was an inside day, which means we look to the day after that, closed below it. And so again, if we're looking at about a $2 move lower, that would have been to about 25, and guess what? It happened, and it happened quickly. Now we're actually starting to move up again, which tells me right now that 24.90 to 25 is major support as we're consolidating here at higher levels, and some of it will have to do with the dollar, but clearly this has made its move on its own fumes. Another move over this high of 2680. And again, not only does that give us great information about what's going on with food commodities, inflation, but it also tells us that there could be other issues in some of the other food commodities coming up as we get into a summer. So in conclusion, basically it looks like this. The dollar right now, we can make more of a case for a bull. The gold and silver could be choppy, possibly going down. Right now, with CPI coming out, it's very possible that if it comes in showing a little bit of a relaxation in inflation, the dollar could roar, and that could affect the currencies, also the metals, and the sugar may be on its own fumes. In reverse, of course, if the CPI numbers come in hotter, then we most likely will see the dollar actually go down against the currencies. We'll see the metals go up, and sugar will go up regardless. Platinum also being another X factor. Hope that was helpful. Thanks so much, and bye for now.